Hi, everyone. Welcome to a new episode of Fatherless Sons. My name is LaShawn Wiley, and I am your host, and this is episode 121. On today's episode, under Building Your Empire, we'll talk a little bit about the stock market and the volatility that a lot of people are experiencing right now in the stock market. Under Couch Time, we will be talking about being selfish and it being okay to be selfish. And stick around towards the end for Fatherless and Famous, where we'll be revealing today's episode, Fatherless and Famous. We like to celebrate someone who made it big, even though they had to overcome adversity dealing with growing up in a fatherless home. So let's go ahead and dive right into building your empire. On today's episode, like I said, we want to talk about the stock market. Right now, the stock market is all over the place, and some would be calling this a black swan event with the war with Iran. And just so everyone knows, a black swan event is when something unexpected happens and the stock market takes a hit, a serious, severe blow because of the event that's happening that no one really expected, kind of came out of nowhere. So they like to call those black swan events. The market has went down a lot since the war, and it's primarily because people thought that the war would be over by now. I think the president's estimate as far as when the war would be over was 4 to 6 weeks or so. And I think we're rounding about a month going on to the 5th week now. So the war is obviously lasting a lot longer than a lot of people expected. It looks like Iran is being a little stubborn. They don't want to really give in and negotiate and agree with the terms that was set out on this last peace agreement that was sent out by the administration. So the stock market is taking a hit. A lot of people are saying, you know what, if this war is going to go longer than we expected and the Strait of Hormuz is going to stay closed, then oil is not going to be passing through. And even though the U.S. does not get a majority of their oil from that strait, it still affects the oil prices. And this is why oil prices are well over $100 per barrel right now. It's because if oil prices in one part of the world is affected, since oil is a global commodity, it's affecting the U.S. as well, even though that's not where we get a majority of our oil. We don't hardly get any. I want to say it's like 5% or something like that. So oil prices going up and spiking the way it is because of oil not moving and flowing, no pun intended, the way it should be moving right now through the straits, is affecting prices and of oil, and which affects the prices of everything else when it comes to business. I mean, think about it. Business, they have to move things through transport, through trucks, through shipping, and all of that takes fuel, and oil is fuel. So if the price of oil goes up, the price of fuel goes up, hurting the profitability of all of these companies. So high energy and oil prices affects everyone. This is why some people are selling, and Friday was a pretty bad sell-off because a lot of people wanted to just get out of the market and stand to decide just in case the administration decided to announce some unexpected news that they don't want to feel the effects of a negative headline while still being in the market. So a lot of traders decided to jump out of the market, and investors, institutions jumped out of the market on Friday. So this is why the sell-off was so painful. Now, this stock market volatility, the way you survive it is, number one, stay updated on what's going on with the war and what's going on with news in general. Now, if you're trading, then you can use these news events to make some money. Okay. You just got to kind of predict and guess the right way that the market is going to go, and you can make some money based on making the correct bet. But if you're investing, if you're just a regular retail investor, you have institutional investors, those are big companies and big hedge funds. And then you also have retail investors, that's me and you, just the individual who's trading their own money. So for a retail investor, if you are looking to invest and not trade, you probably need to put your head down and ignore all of what's going on with the war and the volatility of the market. Now, this is not financial advice. You have to make your own damn mind up on what you decide to do. But me, myself, I'm choosing to just keep my head down. That's the smartest move to make, in my opinion, based on my trading experience. Because if you try to time the market and you're jumping in the market, out of the market, in the market, out of the market, you're just hurting yourself and losing money while the more experienced traders are taking advantage of your indecisiveness. They're looking at you throw money away because what you'll end up doing as an inexperienced trader is you're going to get out of the market at the wrong time, and then you're going to jump back into the market at the wrong time because you don't know what you're doing. It's better to just sit on your hands and do nothing, in my experience. So it depends on if you're investing or if you're trading. And investing is identified as a purchase of stock that is held over 12 months. And trading is trading into a stock that is held less than 12 months. Now, another thing I want to talk about when it comes to the volatility of this market based on the war right now is dollar cost averaging. And what dollar cost averaging, or better known as DCA, what that is instead of moving all of your money in or out of the market at one time, you want to do it over a period of time, little by little. And the reason for this is because of the volatility of the market. Sometimes the market is going up, sometimes it's going down, but you want to get a position. Like, let's say you want to take a position in Meta and you have $10,000 that you want to move into Meta. You're not going to just one day make a market order for $10,000 and buy all Meta with that $10,000. You want to probably move it over a period of time. That period of time it's based on, how much time you want to use to get in the market, but it could be anywhere from 2 weeks. It could be 4 weeks. It could be 6 weeks, and you could just divide that 10,000 by the time frame that you're looking to move into that position. So just move it in over time, even though the market is going up, the market is going down, none of that matters because you're just going to keep going in, moving that $10,000 into that meta position over time. If this is something that you're doing automatically out of your paychecks, which is always advisable, have some of your paycheck going into your stock account automatically. During these kinds of times where the market is really low, you may want to up your contributions a little bit. If you're already putting in, let's say, $100 a month into your stock market account. And right now, the markets are pretty far down. They can go down even more, but they can also go up. Maybe you want to put in $140 a month for now. Maybe you want to put in $150 per month to take advantage of the low market. Now, you're not going to, go YOLO and just put, double it and go 200, because what if the market continues to go down and you didn't really buy at the bottom of the market? So this is what we're talking about, dollar cost averaging, because you can't really time the market. It's just too hard to do. Let's talk a little bit about conviction. And conviction is really important right now with the volatility of the market, because if you buy a company because you think the company has a great future, then you need to stay locked into that company, even though the market is going all berserk, especially if the fundamentals of that company has not changed. For example, I have a large position in Tesla. I think I've told a lot of people that already on this channel. And Tesla has a lot of great things going on right now with their robotaxi, with their electric semi that they're rolling out, with the line for Optimus kind of coming up to speed, with the autonomous driving that's happening on the Cybercab and with people's personal vehicles. They have so much going on that I am still convinced that the company is going in the right direction, regardless of what's happening in the market with the war. So when you have that conviction, do not let black swan events move you or shake you from being in that position unless you know what you're doing when it comes to trading. If you're invested in a company like I am and you're a retail investor and the market is kind of ups and down and it's going all over the place, but the company fundamentals has stayed the same, then you just want to put your head down and ignore all of the noise. The last thing I'll talk about when it comes to this market's volatility right now is the media. With the media, you have to remember what their primary job is. Their job is to get eyeballs on TV. So they're going to be extreme. They're going to hype up all kind of crazy things that's going on. And you have to separate the noise from signal. Noise is just the talking, the hot air, the noise, the people just gossiping and saying things without substance. And signal is when the news is saying something that has a lot of substance to it, that is material, that can actually change the outcome of your portfolio. So you want to ignore the media noise if you can decipher from what's important and what's not important. Do not be swayed by the market and follow them down a rabbit hole, because they want to sensationalize all of the stuff that's going on to get eyeballs. Don't fall for it. Now, let's go ahead and jump to our next segment, which is couch time. And on couch time today, I wanted to talk a little bit about it being okay to be a little bit selfish. It's okay to be just a little bit selfish because you have to put you ahead of what's going on around you. And when I was a life coach, I used to coach people on this, especially young adults that was just now kind of growing up into their own way and their own path, especially when they were trying to get from under the shadow of their parents. Instead of doing what their parents wanted to do what they wanted to do and what they had a passion for. So sometimes when it comes to being a little selfish, you have to tell people no. Sometimes people are going to ask you to do things or they're going to ask you for some of your time. And if that interferes with what you want to do and what you need to do, it's okay to say no to someone. Let's say someone wants to, for example, ask you to help them move on a Thursday when you already know your Thursday after work is packed. It's okay to tell them, you know what, I have plans. I can't really do it right now. I'm so sorry. Maybe if you were doing it a different day, I could probably help you out. It's okay to say no and be a little selfish and put you first. And that would include over your parents, over your siblings, over your spouse. Sometimes you have to put you first. I'm not saying always put yourself first and just ignore the needs of those who rely on you, because sometimes part of being there for others is giving your time and giving your attention to them. But if you begin to give your time away to the point where it starts to hurt you, that's not really going to help you. You have to be able to draw a line somewhere. And this will also include who you actually decide to help, whether it's with your time or with advice. Not everybody is going to want your help, even though they may say they need help or you see that they need help. You may not be able to help them because they're not ready for the help. I was mentoring someone who was actually trying to help someone else that they knew could use the help. But the person that needed the help wasn't motivated to receive the help. So it doesn't matter your intentions on helping someone and you knowing that you know the path that they should be going down and you want to help them get down that path. If they are not ready to travel that path, do not waste your time. Wait for them to come to you for help before you offer your help and try to give it to someone who's not ready for it or who simply don't want it. So guard your time, be a little selfish, and don't forget to, at times, say no when it hurts you. Put you first. It's okay. Now let's go ahead and go to the last segment of today, which is Fatherless and Famous. And during this segment, I'd like to highlight someone who found success even though they grew up in a household without a father figure. Today's episode, Fatherless and Famous, is Lee Elder. I did not know a lot about Lee Elder when I started doing research on Lee, but he's the first Black golfer who played in the Masters. Now, before playing in the Masters, he won 12 PGA events. So he was a good golfer. And where he got his start was when he was a kid. He didn't go to school like he was supposed to. Instead, he would ditch school and he would caddy for the rich. And while caddying for them, he would watch their swing and watch them play golf and watch the etiquette and learn from them. And I always say this, I've said this before, if you want to become really good at something, hang around those who are already good at it. Now, his father was actually killed in World War II. That's why his dad was not in the picture. And Lee Elder was one of 10 kids. So his mom had 10 kids to take care of without a father figure in the home to help her out. And Lee was the youngest of the 10. It's funny how us youngest always seem to figure things out by watching our elders and our older siblings kind of go through it. So we have a slight advantage there. Now, Lee did not go to college. He did not graduate from college, but he was just like a hustler, caddying on the golf course and watching people play and learning that way. And he went pro. And like I said before, he won those 12 PGA events. And eventually he won the Masters in 1975. Way to go, Lee Elders, on finding success, even though you didn't really have the guidance of a father figure in the household to help you out because of your father's untimely death. Now, Lee did pass away, but before he passed away, he made sure to give a lot of his money to a foundation that he created. He tried to mentor others and give back. And I'd love to hear when these people that I highlight are giving back to the less fortunate. You want to try to help prevent others from going what you went through. If you can, if you have the platform and the ability to do so. When Lee passed away, his estate was not really huge. He was not super flashy, but he lived a comfy life. His net worth was around $5 million. And he didn't really want for a whole lot. He didn't really want a lot of flash based on reports that I was able to dig up, but he still was comfortable and managed to give away a lot of his money. He found a way to give back and help others who grew up in a situation or a similar situation as he did. So way to go, Lee Elder. Thank you all for joining me, and go ahead and hit that like button if you enjoyed this material. Also subscribe so that you can click that notification button so that you are aware whenever I drop a new episode. Until next time, I will see you all later.